makes the stock market so appealing? They can buy and sell the same day. So today, it's really about doing things that are bigger and harder than most people won't go do, right? Like solving liquidity. That's a big, hard problem to solve. But we just wanted to create a good multifamily conference that's come one, come all. I love the business because it's people, numbers, and systems. The goal with getting into anything new, it's not about being perfect, right? It's about making steps and just making sure you don't stand on a landmine. The liquidity problem that as an operator, we all know there's a big problem there. It's one of the biggest feedback that we get from investors. The operator, it's not gonna be just that person that you know. These deals are big deals, right? People don't realize you're not buying an apartment, you're buying a business. You're worried about the buy, but really start thinking about how you're gonna operate it. That's where people can, live and die. As an operator, who is our customer? Our customer is the investor. And so you need to give them a white glove experience. Give them that quality of service. I tell them, name me 3 deals that you looked at a year ago. What were they selling it for and why was it being sold? Very few people can answer that because there's a lot of money on the sideline. Nobody knows where the market's going, how it's gonna go. And so you need to be able to ride the deal out. Most investors, from my experience, don't actually understand pref equity and why it is so much better than just your traditional LP investment. You're gonna make some mistakes, but just not something that's gonna, fundamentally kill you.
Welcome to the Fundication Show. I'm Julie Tallman, sitting in today for Kalani Michelle, and I'm with my co-host Christian Sadler.
Hey, everybody.
And together we would love to introduce Feras Moussa with Disrupt Equity. Excited to have you here today from Houston. We want to dig in and find out all about Disrupt and what makes you guys different, what sets you apart. But first, since you are new to PREIshare, we wanted to ask what you understand about us at this point.
Great question. That was the first question I asked whenever I kind of got to meet you guys. And really, I think there's 2 problems that you guys are solving, right? First one is the liquidity problem that as an operator, we all know there's a big problem there. It's one of the biggest feedback that we get from investors, right? And then, how liquid is it? What does it look like, et cetera? And the other one is one that is a little bit near and dear to my heart, pref equity. So, we've done a pref equity fund. There's a lot of value in pref equity. And most investors, from my experience, don't actually understand pref equity and why it is so much better than just your traditional LP investment. So kudos to you guys.
Yeah, well, and I'd love for you to hit on some of those points because I could fill in the gaps, but there is a big difference and there's some huge benefits as an operator, right?
All right, so the way I like to operate is worst case examples, right? So in a deal with pref equity, there is a worst case situation where the pref equity gets all of their investment back and they get their pref and the LPs got completely nuked, right? That kind of speaks for itself. And so what does that really mean? It means that pref equity gets paid first and they get their capital first. Then you have the LPs that can, get the upside. Now, pref is saying, hey, I don't want to take that upside. I just want the reduced risk. And so, pref may be 8, 9, 10, 11, right? LPs may make 30, 40% return on a deal. It doesn't matter, right? The pref is saying, I just want the fixed, safe investment. You guys can have all the upside that gets produced.
And then the other side of that, rather than having debt, right? We're not complicating the debt situation by going on title. We're coming in as a GP interest.
Yeah, and I like to say pref is like mezz debt without the lien, right? That's kind of another way for people to think about it that might be familiar with finance, with kind of just the debt world.
Yeah, and that's one thing that we found out when we first started talking about offering pref. All of a sudden, these sponsors started thinking of all of these different ways that they could use it and say, basically saying, could we use it as bridge? Can we use it in this way or that way? And, when we looked at it, as long as it pencils the same, we're all good with it.
Yeah, absolutely. There's pref can make deals. And even for an operator, right, what is the goal of pref? Because even for us, we have pref deals and then we'll have kind of the traditional LP. It can help juice returns, right? What does pref fundamentally do? It moves cash flow into IRR. So you give up cash flow and you're getting a higher IRR, because the LP stack is getting smaller. So for those that are mathematically inclined, that's what you can kind of expect.
All right, I love it. Let's talk about the liquidity issue and what you've maybe seen in the marketplace there.
Ultimately, right, what makes the stock market so appealing? They can buy and sell the same day, right? You can sell on a whim. If you feel like the world's gonna, implode, you can go sell everything. If you feel like the world's rock and roll, you can go buy everything, right? It's easy to get in and out. Real estate, unfortunately, is not that, right? It's a 5, 7, 10-year play, right? Obviously, for those that are listening, check out your operator and what they're targeting, but your money is typically locked up in that. Yes, you can sell your shares, right? But that's not necessarily trivial, we've had investors that needed to liquidate for one reason or another, right? It could be, a divorce, it could be a death in the family, it could be that, hey, they just don't believe in the deal. I mean, those things can happen, right? And as an investor, you're kind of tied up. So you're placing your bet and it's there locked for that 5 years. And so it's about how do you make it more liquid, right? The more liquid you can make, the more intriguing it is to investors because they start to kind of put on, okay, this is a short-term bet, not necessarily a long-term bet that I have to kind of put in and forget it.
Yeah. And I would say that you as an operator, you're probably having to offer higher and higher returns to overcome the liquidity issue. So if you solve the liquidity issue, there's the potential that you could keep more of those returns for yourself.
Yeah, no, absolutely, right? It just ultimately, it's for every investor that invests, there's also an investor that says, hey, it's not liquid, right? And so if you double your investor pool, it becomes easier to raise equity.
I have a question for you. You guys have some great online content. One of the things you said that we tend to agree with that I really like, that's so timely right now, I think, is you said, not afraid of the Fed rate hikes. Can you speak to that and how that's affecting you guys?
Good question. So for us, a couple different ways. So I look at it in deals that we buy and deals that we could buy. So in deals that we buy, right, there's deals that we had bought previously, and there's deals that we bought knowing rates were higher. And I think I love this business for three things. It's people, numbers, and systems. If you spend the time and model the deals, right, you can basically model in a worst case. And I'm very thankful we spent a lot of energy last summer modeling in a worst case. And I actually feel really good about the portfolio, right? What did we do? We basically said, hey, if interest rates stay high, and we model the SOFR forward curve, and whenever we go to refi, what do rates look like? What does a cap purchase look like? And how do you essentially make sure you have all that money available, right? But now, what does that do today, right? We're starting to see deals available. Operators, and I know many of them, and I'm not going to mention names, but there's, kind of do your research. There's a lot of guys that had to give back the keys to the lender because they didn't buy an interest cap. We buy a cap on every deal. So again, investing in real estate, time can heal all wounds. And so it's really about how do you make sure you're you get to stay in the deal, right? And, in addition to that, how do you model out and reduce the risk? Right, a good investor is just constantly looking at how do I de-risk an investment. And so for us, you get a lot of guys that are having to go and put deals on the market. And so we're buying a pack right now that essentially it's someone that needs to liquidate. Going back to liquidity, he's trying to liquidate for a couple of different reasons. That provided us a $30 million discount on what we're trying to buy today. And so you start to see more deals available. And then the other side of that too is there are less people buying, right? There is a supply problem because there's not as much supply now, but I think that's going to change over the next 6 months. But whenever there's less buyers, people are scared, right? That becomes the opportunity to go in, buy good deals, good locations. So we've really been aggressive, and we've hired on one and another one coming on, another just kind of scaling out our acquisition team. So really trying to make sure we can kind of go pick up the best deals we can find in the market available.
I was wondering that because I read that you guys have 70 million asset under management?
700 million.
700 million asset under management. That's huge. So what do you plan to do in this type of market?
I mean, for us, we're still in buying mode, right? Okay. We're in the middle of a raise right now. We have another raise coming up. And so I like to tell investors, what do we do, right? We try to buy the best deal available today. That's not going to be the best deal we've ever bought. It's not going to be the best deal based on 10 years ago. It's the best deal available today. So if you want to invest, we're going out. We're looking at deals across all of our markets. And what I really drill in the team is we want to look at every deal in our market. So if there's a deal that trades in a market that we're in and I don't know about it, I'm pretty disappointed actually, right? So we are very looking and underwriting all those deals. And then we get a good sense of what that market is at this moment and then find the deal that makes sense, model in the numbers, de-risk it as much as we can. And then ultimately you get to, hey, here's what we're going to present to investors. And investors want to, they can either invest or not, right? And we're never going to be able to force an investor in, right? Investors are going to be emotional. They heard this on the news or, they heard that in the newspaper and that's okay, right? But for me, if you're looking to invest, it's finding the best available deal today.
And Feras, I would love to hear about your organization and your team because, you're coming up on the big B number, right? With this next deal, you're hitting $800 million in assets under management, over 4,500 units. That's a large scale to manage. Talk about the team and how you keep it all in order.
So as we've grown every day, I'm learning more and more. It's not about me and my partner, Ben, anymore. It's not the Feras and Ben show. It's about getting the right people in place. And so I spend more and more and more of my time in the interview process. And I heard a phrase that I loved recently, which is micromanage the interview process so you don't have to micromanage the employee later, right? And so for us, it's bringing on good people, enabling them, and letting them make their decisions. And yes, they're going to do things differently than I may have. I might have wanted this, this table to be brown and it's white, and that's okay, right? Because it's done with the right spirit, it's done with the right end goal. And for me, it's, can I get people on that would do it to 90% of how I would have done it, right? And enable them and empower them, right? Because we're looking for people that we can make disruptors for life in the company. And so today it disrupts 175 people, right? And it's just been, it was 2 people 6 years ago, right? And it's just been really focused on hiring and bringing in the right people and getting the right people in the right seats. And so that's a whole nother episode. We can do another day of what it takes to grow a company. But the problem with this business, and the best part of the business, is that it's people oriented, right? And I like to say management is the best, worst business, right? Because it's very people heavy, right? Very, very emotional driven. And really people in management are kind of stuck between owners and renters, right? And so you're kind of bombarded from both sides. How do you manage that? And for the longest time, I think at Disrupt, we were kind of 2 companies. It was Disrupt Equity and Disrupt Management. And we've since in the past year and a half really kind of glommed it and say it's all Disrupt. And we're here to build the same culture across both of them, keep the same, personalities, the same styles. And so it's gotten much better over the past year and a half. And we're really excited to kind of see where it goes. But it used to be a tale of 2 cities. Like I like to say, we were undefeated in Disrupt Equity. Never had anybody leave us on Disrupt Equity. Management's a different situation, right? Now, obviously management has a lot more people, but I'm kind of looking at it, okay, how do we get disruptors for life?
Yeah. What is the Disrupt story anyway?
It's really not as sexy as maybe someone else's story. I just remember, ultimately I came from tech, right? Previously worked at Microsoft and had a software company. And my initial theory was to go leave tech and go into an old industry like real estate, right? Kind of boring, kind of dated, and build new software, right? And we were building property management software of all things. And that didn't pan out. And, kind of found out about syndication and everything else and started Disrupt Equity and named it after tech, right? And realized the opportunity was to use tech to make us a lot more efficient and effective than, a lot of our competitors. And so early on just started to do things. And, I met my partner, Ben, and we clicked very well, and kind of the rest is history. And so today it's really about doing things that are bigger and harder than most people won't go do, right? Like solving liquidity. That's a big, hard problem to solve. Most people don't want to do it. Most people want to just go and do what they were taught somewhere and rinse and repeat. And people really focus on the buy and forget that the operation is actually much harder to buy. That's where we're, starting the management company. We have a conference. All these different things are really about differentiating us. And so it's in our DNA, and we want to disrupt what's normal and kind of find ways to stand out.
Feras, you mentioned that you have a tech background. How did you come into real estate? And tell us what you think your tech background has been able to allow you to offer to real estate. Tell us a little more about your story.
So I'll say I have an entrepreneurial background. So rewind, right? Made money first online, right? And initially it was from a game. There's a game for those of you out there, Diablo 2, right? And I remember literally a guy mailing me money in the mail. And I think back, I'm like, man, what was I thinking giving a random guy online my address? But the guy mailed me cash. So I kind of learned about that, and then kind of stumbled upon web development. And I started making websites initially for myself, websites to sell. And I sold one of them to a guy who owned board.com, B-O-R-E-D. And I was proud of it because it was a website that I made in a weekend. And I think I got paid something like $1,000, which is for weekend in high school, like that's great work, right? But then I realized the guy was making like $2,000, $3,000 a month from it after I sold it to him. And so it kind of light bulb. And then because he paid me to continue to improve it over time. And so that kind of got me, okay, let me go start making my own websites. And so ultimately started to learn about hiring people, building a little bit of a business. And then, college happened and I was going to go be a doctor. My dad's a doctor. So I kind of sold everything and was going to go do that. And then after a year and a half, I'm like, I hated memorization. I'm not a memorizing guy. I'm a problem solving guy. Switch into computer science, right? Much more difficult degree, but it came a lot more naturally and I had done a lot of it. And this is where the story, I think, in my mind, right? And again, I'm a little biased. It's my story, but this is where it got interesting. So I wasn't planning to go to career fair. I was always going to go do what I did before, right? And my friends went to career fair, so I put together a resume and I, went to career fair. And I was one of the only guys that had something to talk about. I had already done a website company and I had a lot to talk about. And at the time, Indeed was one of the first people to interview me. And they were a much smaller company. It might have been 30 people, 40 people in the whole company. And so, I did well at the thing. The lady, I remember her very vividly. She was interviewing me right then. She's like, I got to bring you back to meet the team. So then, a week later, I'm interviewing in the office. Did very well in the interview. But the very last person interviewing me was one of the founders, and his name is Ronnie, right? And, he ran the Austin office. And he asked me a question, which was ultimately, why do you want to work here? And I was so naive at the time. I told him, well, you guys are like growing from a small to medium-sized company, and I want to have my own company one day. I'd love to see that happen, right? And then at the end, he's like, you aced the interview, probably one of the best interviews we had, but I can't hire you. I was like, wait, what happened? And he's like, well, I need someone that's going to stay here, not a guy that's going to be here for a year or two, right, and leave. And so then fast forward, you kind of start to learn, all right, what are people looking for, right? You kind of grow your mind space. Whenever you have any meeting, right, what is the other person looking for? And so fast forward, ended up going on internship at Microsoft, loved that, had a great team, went full time. But I told myself I was going to stay 2 years and out. I didn't want to get the golden handcuffs that a lot of people do get, right? And I have friends that are stuck in that right now. And so I ended up leaving at 3 years. So I kind of, I lied to myself. I said 2. It ended up being 3 because I wanted to leave at the right time. But really left to go start a software company. And as mentioned, I thought it was about building new software, but I found out that it was about creating software to make us more efficient. And so to not go too long into the story, ended up, at the time, started buying my own real estate, bought a fourplex, bought a bunch of houses. And I'm like, man, this doesn't really scale. Like, yes, you can make money in real estate a million different ways, but it didn't scale for me, right? And so started learning about apartments, and I'm like, all right, this is more of my fit, and the rest is history.
So great. When you transitioned into real estate, were there any pitfalls, or do you have like one nugget of advice for anybody trying to break into real estate or syndication?
Yeah, I'll say 2 things, right? And I see this a lot because I get asked that a lot. I think the first thing is don't fall in love with the numbers, right? The numbers, that's what I like about this business. It's very number oriented. Don't fool yourself and sway yourself one way or the other, because you see that all the time. And those are the guys that are getting foreclosed on today. Right? I mean, and I see it. There's deals that we try to underwrite, and maybe we say there's $150 rent pops, and that's about all we saw. And someone else we know ends up buying it. It says $350 rent pops. And I'm just like, man, that changes the deal so much. Right? And so anybody can make a deal work if they fall in love with it. So you have to not fall in love with the deal, right? Kind of be strict in kind of what you're doing. And then the other nugget I tell people is, you're worried about the buy, but really start thinking about how you're going to operate it, because that's where people can, live and die, right? And that is the much harder part of the business, and that's where it becomes really time intensive. And if you perform for people, guess what? You can continue to buy. But if you don't, people can go into operations and basically disappear off the face of the earth. So,
how long do you guys tend to hold your properties?
I like to say we're opportunistic investors, right?
Good.
So we present deals 5 to 8 year holds. We've, anywhere in that range, but we've also sold 13 deals. Right, and those were not 5 to 8 year. So I like to say we're market driven, and so we will buy deals, we will de-risk them as much as we can, right, and then we present that to investors, and then ride them out. And the market kind of stays low. Great, we kind of do the business plan we had, right? Hey, we're going to get this cash flow over this time period, but market gets better. It'd be naive to not capitalize on that, take those exits, right? Investors like to take wins off the table. That's something I've learned over my lifetime, is to constantly take wins off the table, right? Don't get greedy. What's the phrase?
Pigs get fat, hogs get slaughtered.
Yeah, thank you. Pigs get fat, hogs get slaughtered. So, bears make money, bulls make money, pigs get slaughtered.
Yeah, that makes sense. And so you were talking about, you analyze a lot of deals. I mean, you try to look at every single deal that comes across your markets that you're in. What markets you're in, and how do you analyze so many?
No, so that's actually a great example, right? So with the markets that we're in all the Texas major markets. We're in Florida, we're in Atlanta. We want to get into Nashville. We want to get into Tampa. We want to get into North Carolina. Those are markets that we are starting in Indianapolis as well, as there a couple days yesterday. And so I want to get into those markets. We're not there yet. But what we do for underwriting is an example of what I mean by bring tech and make us more efficient than others. Most people that you talk to, what do they tell you? They tell you, hey, my goal is to underwrite 2 deals a week. So they maybe get an email that comes in, maybe not, right? They might stumble upon an email, and then they go in and say, you know what, I'm going to underwrite this one. And then they'll go spend an hour or 2 to clean up this rent roll and plug it into the model, and they spent maybe 6 hours underwriting it. It doesn't pencil, and they move on, right? That's their one for the week, and then maybe do the same thing a couple of days later. That's probably 90% of people. For us, it's really about every deal in our market gets ingested into, right now, right? Again, we've evolved this over time. So for those out there, you don't have to boil the ocean at the beginning, right? I tell the team it's about constant iterative improvements. But today, deal comes in, whether it comes in from an email, whether it comes in from a phone call, whether it comes in through, just a direct email, right? Any of the above, we have one place we forward them into. We have one person that owns taking that and then plugging it into the CRM, pulling out all the data, downloading all the OMs, plugging it into the CRM, and getting all the links and everything to where it's all normalized, right? Then we have different gates. We have kind of the fast and dirty. We have all these different steps, and it's about 12 total. that different people own, and we run them through, right? And so we start to run numbers and volume, right? We have 6 people involved, and we're looking at it very methodically. And I can tell you, hey, how many deals did we get in Indianapolis the past 6 weeks? Or I can tell you how many we got in the past week, and are we trending in the right direction, or are we not? What is the average spread between the broker asking price and what we know it's sold for, right? So we start to go store all this data over time, and it kind of becomes our own little mini CoStar, because we're looking at thousands of deals now. And it's nice for me to be able to go back and say, hey, why was that deal for sale and what were they selling it for? Like, most guys can't tell you that, right? Tell them, name me 3 deals that you looked at a year ago. What were they selling it for and why was it being sold? Very few people can answer that. I can go get you 1,000 of them and tell you all the reasons in the notes that we have. And then on top of that, say what's the spread between where we landed on price and the ask. And so we can know which markets are we just constantly missing, right? That we're not able to get anywhere close on, versus which markets are we seeing it narrowing. And so there's a lot of data, and I'm hiring an analyst right now that's going to start to consolidate this. I'm kind of excited because I know we've been collecting the data, but now I can have someone who can really start to look at it from a much higher lens and start to say, what else can we make out of this, right? What recipes can we extract out of these ingredients? And so that's an example, right? Using tech, combine it. Most people don't track their deals in a CRM, right? Most people don't have a whole pipeline for it. We do. So.
Yeah, I was going to ask, how do you manage all of that data and what do you do with it? Are you able to go back to deals later on and get them because you know what happened in the past?
Oh, absolutely. We track them, and and even just the broker telling me what whisper the broker told me 3 weeks ago versus what he's telling me today, right? That tells me something's happening. If they told you, hey, the whisper is 180 a door, then today he's like, hey, it's 160, right? The real ones might be like 150 is where it's shaking out at, right? They're not getting the interest. And so we do, and we go back and look at them. Typically, once a deal's past a certain stage, because we have a step where it's just waiting until we hear something, right? Something could be that, hey, there's a buyer, it's already moved, it's going to close, or a seller's not going to sell. But there's some deals that just kind of stay there, and every now and then you kind of poke and say, hey, what's the latest on this? What's the latest on this? As a matter of fact, I got one I need to text a broker about probably after the show, where I'm trying to fill it out. It's a beautiful deal, great location, institutionally owned. They move very slow. For those of you that know institutions, there's only about a 45-step approval process to change a price. And it takes them so long to change the price that the market keeps shifting. And so, they were at, I'm just going to make up a number, $80 million purchase price, but really market's at like 70. So then they're like, all right, we're going to drop it to 75. And so then they go through this process, and the broker comes back in a month and says, hey, price is now 75. Well, market now is like 65. And they've done this 3 times. And so I'm at the point of just kind of sending a Hail Mary. Here's an LOI, really aggressive earnest money. We'll buy it at this price if they just want to offload. So,
I keep diving into the team. I want to hear more about this team. Over 100 people. Are they local? Are you outsourcing it all? How does that all look?
So we used to be a fully remote company. And thankfully, right before COVID, we got an office. And that was probably the best thing we did, right? I used to think, I was always remote for 10 years, right? So I was like so comfortable with it. But there's so much value in having people in the same space, being able to solve problems. And we move at warp speed, right? And remote works well, but whenever you're moving at warp speed, we're constantly changing, reinventing, revisiting things. It's hard to do without being in an office. And so a lot of our company is in Houston, right? So again, let's just kind of break it down. 175 employees total. Of the 175, probably about 150 of them are property management related people. You kind of have the remaining 25. And for us, Houston is the bulk of it, although our leadership is quickly becoming Dallas. Like we have 2 of our 6 leadership is based in Dallas, and I think we're going to get a Dallas office at some point. But again, it's about the right people. I like to find people that are better at things than me, right? I'm the guy that can help systematize things. I'm the guy that can help think of what to do next and how you do kind of the visionary role, but bring in people that are experts in their space. There was once upon a time we did it all, right? From the accounting to the broker management to the buying to the asset management. But today, you don't want me doing it all, right? And so,
aren't you glad that you don't?
Oh, I'm so glad, especially accounting. That was the one that it was always the last thing I put off, and versus now having a whole team taking that and just doing it much better than me.
Yeah. What do you see coming in the upcoming market?
Good question. So I think rates are not going to fall much in the next year. I really don't, right? There's a lot of people hoping that, and I think it's just going to stay elevated, right? And that's going to lead to more distress, because we see a lot of guys, we do third-party management, they come to us and they want us to fix a deal, and they have $500,000 of AP with no plan to bring cash. That doesn't work, right? Us managing a deal third party, it's so much work if there's cash problems, right? I've learned to be a lot more blunt with clients saying, hey, Like managing your AP distressed deal is like 3-4x the work, or maybe even 10x the work than a regular stabilized deal. And so we're starting to see more and more noise from people that have deals that are struggling, right? And people that thought they had some really good reserves, they had $100,000 or $200,000, because I used to be one of those, right? Early on in our career, we had a deal, we thought we had a lot of reserves. It was like $300,000. It was severely mismanaged by third party, and that's why we created our management company. And I quickly realized $300,000 doesn't get you very far. Right? And so you have guys like that are starting to realize that they're going to run out of cash. And so there's going to be a forcing moment to do something, whether that's a cash call, whether that's sell it, or, try to figure out some deal with your lender. And so there's things like that you're starting to see. There's a lot more rumblings. And I think Q3 is really where all that's going to start to uncover, because people are starting to run out of cash. And so I'm really curious to see what happens, right? There's still not a lot of buyers, there's still not a lot of supply. So pricing has kind of stayed, right? It did drop a little bit, but it stayed flat. But I think now you're going to start to see a lot more supply. So the question is, what happens to the buyer pool, right? Does it start to pick up? Because there's a lot of money on the sideline. I was at NMHC back in January, and the biggest talk was insurance costs and taxes. But then the next biggest talk is there's a lot of people waiting with money ready to go, but they're just waiting to see what happens. And so we'll see what happens. But for us, it's about finding the best deal available at that point in time.
Yeah, I know with a lot of our interviews, we're talking to people that they've been pulling money off the table, and they've been, building up their reserves, waiting for the opportunity that's happening. Us ourselves are, doing our raise so that we can specifically help people, with pref equity in those situations. But the numbers still have to pencil for it to work. Some of these guys have bought properties completely wrong. What would be your advice to somebody that is in a deal right now that they're having challenges with, and they're trying to make it to that next step?
As an LP or as a GP?
As a GP.
I think as a GP, time heals all wounds. So can you stay in the deal long enough? And it starts with you're going to have to come to terms with cash, needing cash. And I'll give you an example. We manage a deal, and essentially that client is definitely underfunded, and they're doing a cash call. And I asked them how much, and they said $300,000. And I'm like, your problem is not a $300,000 problem. Your problem is like $1.5 million to $2 million problem. And so I kind of walked them through some very simple math, right? Because again, things don't just fix themselves. People need to realize that. There's a method to the madness. And ultimately they ended up coming to terms with it, and they're doing a $1.6 million cash call, right? It's needing to come to terms with it sooner, because there's going to be a lot of other operators doing cash calls too. And you want to be the guy that does it first, not the guy later, right? Ultimately, your investors will run out of cash. And so it's one of those things that, it sucks to have to do a cash call, to put that on your track record as having done one. Thankfully, we have it. Hopefully, we never will do. But it's something that's important, because again, it's about you doing a cash call de-risks the investment for the investor. So as much as it sucks, it's actually you're doing the investor a favor, right? The other alternative is what? They lose the deal entirely and lose 100% of the stuff. But make sure you have a plan. Don't be the guy that does a cash call and then gets foreclosed on. We have that was all over the news in Houston, right? There's an operator, we know the operator very well, did a cash call and lost all the money, right? That operator was in it for just the fees, right? He was not in it to actually operate and try to save the investors. But that sucks as an investor. So not only did you make an investment, maybe you invested $100,000, then you put another $50,000 in a cash call, and then you lost your $150,000, right? Don't be the guy that does that. And so that's where if you're gonna do a cash call, actually do the math and raise the right amount so you can get past kind of the issue and move forward.
Yeah, I love that. That's great advice. Even if you have to ask for double or triple the amount, if it's going to save the deal, that's what matters. And I've always said that real estate is the most forgiving asset out there. It's just, can you hold on long enough?
Time heals all wounds in real estate. And, and it's funny, there's these guys that I met at an event. So about a year ago, Lumen invited us to an event in Sonoma, California. And I met this father or son who had been doing real estate for 40 years with, them, and they were kind of syndicating stuff with their buddies. And the dad said something that really stuck, which is, those that are rich sell, those that are wealthy hold, right? And it's really about the hold. There's a difference between being rich and wealthy. And so really, the more you think about that, the more you start to realize real estate is a long-term game. It's not a get-rich-quick scheme. Too many people try to do it as a quick-rich scheme, but it's really about getting into deals, making sure you can hold. But then once you get past point, right, you're to continue to hold and continue to pull cash out.
So you've given advice to the GPs. Why don't we give the advice to the LPs? What would you say to somebody in a deal that's struggling?
With any investment, right? Invest with someone you like, know, and trust. And there's not enough people that are doing the trust part, right? Like there's people that invest that have heard of someone, but they haven't dug in. And what is their operation, right? The best example is this article that went around the whole country about these deals I got foreclosed on in Houston. That person bought an insane amount of money in insane amount of deals in a short period of time, but that was a two-man operation, right? Like it took us triple as years and 173 employees more to be able to do that, right? And so understand who you're investing with and what are their goals, what is their alignment, right? There's risk with any investment, but a good operator can try to get a mediocre deal okay, but a bad operator can take a good deal bad. And so really understand that, and what is that person's motivations and what does their back office look like, right? Once you're invested in a deal, you're kind of married, right? It is hard to get out. It's not very liquid, right? You're kind of stuck, and you're gonna have to make terms with, do I believe in this investment if I get cash called, moving forward, or am I just gonna stay on the sideline and see what happens? But for an LP, your homework really needed to be done at the beginning, right? It's hard to give advice on what to do in the middle of a deal that's not performing, so.
Yeah, and that really ties into two aspects of PREIshare. First of all, our sponsor approval process. We're doing a lot of that legwork for the LPs, because there hasn't really been that in the past. Usually you run into somebody who knows somebody that's doing a deal, and you put your money in, right? Because you're thinking, I want to be in real estate, but I don't want to necessarily, or I don't have the time to operate it. So that's usually how somebody gets into a deal. So that I think ties in, but then also the liquidity factor of what we're building with our listing hub, and the fact that the PREIshare fund is specifically targeting buying those fractional interests. So we'll come in and we'll analyze it with a fresh set of eyes, right? We'll look at it from today's value, and we'll make somebody a fair offer.
Yeah, and one thing I've always thought was funny is people will literally spend more time researching a product they want to buy, right? Whether you're looking at buying a speaker or a camera, you will spend more time researching that than a freaking $50,000, $100,000 investment that they're going to make into a deal. It makes no sense to me, right? It's like, I don't get asked good questions from investors, to be honest. Like, you think that would get more and more questions, but most investors don't do the due diligence, right? I've heard someone, and again, the best investor is one that came through referral, and as an LP, the best operator is the one that you refer to also. So there is a little bit of that, but get out there and understand the operation, right? That's ultimately what you're betting on. And these chunks of money, $100,000 is a lot more than that camera that you're going to spend $2,000, $3,000 on. So you actually spend the time and effort to go figure it out.
I think one thing that we really recommend to people when they're looking to investing is find a sponsor that actually reports often. And I heard that you guys do monthly reporting. What would you say to somebody, maybe top 3, 4 quick things, somebody looking to invest? What should they be looking for other than somebody they trust?
Yeah, communication. I mean, like, even today, investors that know me and Ben will reach out and will still respond. And I grill that on our investor relations team. It's about being responsive, right? And I tell people, even you ask me something hard, I have 2 ways I can go about it. I can ignore you and wait until I solve it, and it may take me a week, and I get back to you after a week and you're kind of frustrated. Or I say, hey, I don't know right now, let me get back to you. But make sure to do the follow-up, right? And to me, as an operator, who is our customer? Our customer is the investor. And so you need to give them a white glove experience, give them that quality of service. And, that's how we look at it, right? And even whenever, we've constantly evolved our investor process, right? How do we simplify that process? And it's ultimately just someone that communicates, right? Whether it's before the deal, during the deal, and after the deal, even communicating bad news, right? How do they go about it? And I think that's the most important thing, because that's how you build trust. And so for us, you said, we do monthly distributions, and I'll be honest, it sucks. It's a lot of work for us, right? We just sent them out yesterday, so I'm a little bit bitter, right? Because it was at the end of the month, and my partner and his team drive it. But I mean, it was easy to do it whenever we had a few deals, but now we're like having to scale that, right? And how do you scale monthly updates? And it's, not only do we just send out the financials, we actually write a whole synopsis on the deal and what's going on. But investors appreciate that, right? I have so many investors that say, I'm really glad you do this, because they only see maybe a financial packet every quarter, right? So for us, it's about how do we differentiate ourselves. So I think communication is a big one. Availability to talk, right? That's one where I will prioritize in my key investors over other things. And I was actually just hopping around the country right now, and what did I do? I was catching up with investors in certain markets, as well as other friends and operators. And then ultimately, track record and team, that's the other thing, right? That, depending on the operator, it's not going to be just that person that it's going to be the whole team, right? These deals are big deals, right? People don't realize you're not buying an apartment, you're buying a business, right? And a business has a certain amount of processes, a certain amount of effort, and there's a lot of hands in that cookie jar that need to all be aligned to pull the right cookie out. I don't know, there's my analogy for you.
Yeah. Well, and I loved your analogy. People will spend more time researching a camera, for example, right? And I think that the last thing that I think is always important is understanding the numbers of the deal. Where are the numbers coming from? Why are the projections what they are? And do you believe in that method of, essentially projecting your future?
Yeah, absolutely. And kind of on that same note too, right? The thing, I like to say we're cash flow investors, right? So as an LP, because I invested, whenever I started, my goal, I invested in 10 different deals, and I'm like, all right, how do I learn what they do well and take the good and the things that I don't like, not to do those, right? And, one of the things is it's easy, even if you don't fall in love with the numbers, right? It's easy to make a deal kind of look like it works if you throw a dart on a big exit. And so as an investor, I tell them, look at that all the time, right? What does that exit look like? How much of the deal is based on the exit versus the actual performance of the property as it goes? Because as we know, nobody knows where the market's going, how it's going to go. And so you need to be able to ride the deal out, right, in a worst case scenario.
Well, and that ties into what you said about operations, right? The focus should be, how am I going to operate this, not how can I just acquire it?
Staying in communication with all of your investors and your peers is so important. And I understand one of the things that you and your team do are conferences held how many times a year?
Three times a year. So back to what I said, disrupt equity, right? Disrupting, doing things that are bigger and harder. And so 4 years ago, we kind of realized there's not a good neutral conference available, right? There's definitely conferences for certain coaches or guru groups or this or that, but we just wanted to create a good multifamily conference that's come one, come all, right? Open to everybody. It's not going to be cliques or this or that. And for us, it was also about not selling anything. And we started that out of the blue 4 years ago, 5 years ago. It's been a while now. And, that was kind of the thesis. And so fast forward to where we are today. It's called the Multifamily Investor Network, mfinvestornetwork.com. We do 3 of them a year. Houston is the big one. So you guys got to come out to Houston, and that'll maybe give you a reason to leave Salt Lake. I know it's beautiful here, but that's the big one. We had 800 people show up at the last one. But then we try to do the West Coast in this kind of early summer, and then the East Coast in the fall. And so for us, the next one's coming up, San Francisco. And so excited about that one. And it's really meant to be a way for us to meet our investors, for us as a way to kind of position ourselves, right? And that was kind of the thing that we didn't realize, which was the last piece, which is how do we add value to people that we may not be able to add value to in other ways? And the perfect example is, I think 2 years ago, I told the team, we're going to get the mayor of Houston. And there was a lot of doubt, but we ended up getting the mayor of Houston, right? And that did wonders because the mayor knows who we are, right? And so that was valuable because it's a way to add value to the mayor. He wanted to speak in a room in front of investors, right? And then for us, hey, we brought the mayor that elevated us. And so it's really doing those kinds of things that's led us to where we are today as a company.
Okay. I actually heard about that conference, I think accidentally. I'm on a mailing list, I think, for Neil Bawa, which is one of your speakers. So if somebody wants to find out about that, what website can they go to? How can they check into that?
All right. So mfinvestornetwork.com. And this is an exclusive, all right, coupon code PREI. I'll have the team create that just for you guys to get a discount if people would like to come out. And for us, it's just, it's a place to go network, right? I really hyper focused on that experience. For us, it's a one-day event. We go to events that are 3 days long. That's a big commitment. I'm really looking at how do you get that investor that is interested, that doesn't want to commit a whole weekend, right? 1 day crash course, kind of the A to Z. You're not going to be an expert from our conference. That's not the goal. But it's to let you know what you don't know so you walk away knowing what those things are, but more importantly, meeting people, right? I love to go to conferences. My wife tells me, why do I keep going to conferences? Am I done not learning the same stuff? I'm not inside the room, I'm outside the room, right? Meeting people like you guys, because you never know what may happen from it, whether it's a partner, whether it's an investor, whether it's a whole JV that comes out of it, right? I've met all sorts of people, and I think that goes back to what I said earlier. I love the business because it's people, numbers, and systems. And so that's the big people side of it.
Yeah, very, very true. I heard you say that you're never going to learn about real estate from podcasts, books. You have to get out there and have the experience and rub elbows. And so it's crucial what you're doing.
Absolutely. You have to make mistakes, right? And so you learn, don't be the guy that is just the book person and the person that never goes out and acts on it. I see those people, right? Those people come to our meetup. We have a meetup we've had for years, and there's certain people that have come for 5 years now, never once bought a deal, never once invested in a deal. Right. And so that's why I tell people the goal with getting into anything new, it's not about being perfect, right? It's about making steps and just making sure you don't stand on a landmine, right? So you're going, you're kind of stumbling your way forward. You're going to make mistakes, but just not something that's going to, fundamentally kill you. Right? That's what it's about. And so get out there, and that's where there's not a better way than learning from other people at events.
Yeah, such a key piece of advice. And I've seen the same thing with hosting over 1,000 events now. I've had people that come over and over again, and then they try to grill me with hard questions of how are you finding the deal? but they're not willing to just show up and, be there. They want to come and try to extract as much as possible rather than coming and serving. And that's what I think that my last piece of advice for events, and you could probably add to this, is if you go to those events looking to serve and give to other people, it's always going to come back.
Absolutely. Be the person that adds value, not the vulture that's just there sucking it out of everybody, right? Because that's how you find people that like you or have similar alignments of goals, right? And that's where, again, I've seen all sorts of things come out of our conferences, at our events. We mentioned Neil earlier, right? He met his partners at that. I mean, get out there, find ways to add value to others. That will come back to you in the long run, right? Don't be the greedy person that's just there to take.
Yeah, I love it. Feras, we could speak all day long. I love what you're doing. I love what Disrupt is all about. So thank you for joining us. I know we're short on time. So those of you who have joined us, thanks for joining us for another episode of the Fundication Show, and we will see you next time.